I think it's time we can start it. We can start now. Morning, everybody. Let's give just a couple of minutes more so the assistants will join, and then we'll start.
How to do the registration?
The registration. So we send a link by Zoom, but if you want, we also can share the link here. Okay. Good morning, all colleagues from public development banks. Good morning to the speakers. Good morning to the IFAD colleagues and all the participants. This webinar has been organized by the Agricultural Public Development Banks platform in collaboration with APRACA, with the objective of exploring rural finance inclusion and highlight what is the role of the public development banks in this area. Today, we are pleased to have a high-level panel that includes representatives from the Asia Pacific Rural and Agricultural Credit Association. And we are also honored to welcome Carolina Trivelli, who brings a strong academic perspective and broad experience in the public sector, as well as multilateral development institutions. In addition, we are joined by representatives from public development banks in Belize, who has been recognized for their innovative financial products aimed to promoting youth and women's inclusion, and from Cambodia for further enriching today's dialogue. As a general guideline, we kindly ask participants to use the raise hand function or the chat to request the floor, and we will have a dedicated Q&A session at the end of the presentation. We trust that this will be a productive and valuable session for all. And to formally open today's session and complement this introduction, I'm pleased to give the floor to Mr. Prasun Kumar, who is a leading expert in rural and agricultural finance in the Asia and Pacific region, who has international experience, includes serving as a project manager for IFAD-funded initiatives and also a rural finance specialist in FAO. And he's currently serving as a Secretary General of APRACA. So, Mr. Prasun, floor is yours.
Thank you, Alejandro, for this introduction and the opportunity to to be with this group of experts. So good morning and good afternoon to all of you. I, on behalf of our 95 member financial institutions in the Asia Pacific region, is extremely happy to join this Rural Financial Inclusion Working Group meeting, and glad to see many of the known experts who are working on the ground to deliver the rural financial services. We welcome you all for this important conversation on rural financial inclusion. We in APRACA are committed to support our member institutions in across these 24 countries where we are working currently to build their capacities for adopting inclusive finance as their business process. APRACA is cooperating with AGRI-PDB platform since its inception to promote knowledge and contextual nuances of inclusive rural finance. I think all of you understand that it's mostly the contextual, with special emphasis on access to the affordable financial services by the smallholder farmers in agricultural space. We sincerely appreciate the support of the AGRI-PDF platform to bring the regional knowledge to global center stage. That's very important, and to the policymakers, reaching out to them. During the last few years, we in APRACA observed that there are many innovations in terms of development, delivery, technologies, policies, and risk sharing in rural finance, which are being supported by the national level public development banks, majorly our member institutions, but at the same time with active support from the central banking system. APRACA strongly believe that the public development bank at national level are contributing to achieve the national goals of the financial inclusion, which are part of their normal business process. However, the rural financial inclusion took a backseat. It is more evident in the city side, but rural finance is taking the backseat as the rural populations are dispersed, and it's expensive to reach out. However, the digital finance has supported to reduce that cost, but the rural infrastructure are not very supportive, are not ready yet to provide this level playing field. The PDBs can play a very important role in developing the rural IT infrastructure to provide facilities for these digital financial services. As major PDBs of the Asia-Pacific region are specialized in development finance, they need to support the rural banks and the microfinance, as well as the groups, which can in turn provide the financial services to the doorsteps. For example, the deposit taking. So majorly they don't take the deposit. So how to provide the deposit for the women folks? The PDBs can since last 2 years, APRACA with the active support from FAO is implementing a rural finance capacity building project in 5 countries. We observed that the tailored product and risk mitigation instruments are the major blocks in rural financial inclusion. We need to work closely with the PDBs to support the village level institutions, groups, civil society, microfinance, and village banks to develop the financial products and services which are suitable to the context, along with the equal importance to the risk mitigation products. I'm sure that today's discussion will provide us a lot of insight, which we can use during our next steps of working with the PDBs. Thank you very much. Over to you, Alejandro.
Thank you very much, Mr. Prasun. Thank you very much for this introduction. And now I will give the floor to Carolina Trivelli, who is the former Minister of Social Inclusion in Peru, and now is research in the Institution of Research in Peru. So, Carolina, the floor is yours. Thank you very much for being here. You are in mute.
Do you see my screen? No,
Yes.
I'm... okay, let's try to put it in presentation mode. Now you see it? Okay, thank you. Thank you for the invitation. Thank you for the opportunity to share with you some ideas to try to open the discussion on why and how can public development banks really help rural financial inclusion. So I just want to give you a few ideas. We have a large document that probably Alejandro has shared with all of you. So happy to go further in any of these discussions. I want to just talk a little bit about why rural financial inclusion, what we understand by rural financial inclusion, why is it relevant for the public development banks, and what things are being done by these institutions to really move forward in the rural financial inclusion agenda. So the first consideration I want to open is that where we want to go. Rural financial inclusion means that rural populations, their organizations, and their businesses in agriculture and in other rural activities that could be completely independent from agriculture or strongly linked, as we know, can access and use all a huge diverse set of products and services that could be offered by financial institutions, and that these services are not only there and affordable, but they are really meeting the needs of these different actors in the rural space. This means that we need not only credit, which is the most popular service for sure, but as Mr. Prasun Kumar was saying, savings, several types of products to address risk management, and we hope that all these products and services will be delivered in a responsible and sustainable way by financial institutions. So this is the place where we want to be, ensuring that every rural citizen has the opportunity to use whatever financial services they need in a proper way, and that those services are available. And why we want to get there is because we already know it's proven that financial inclusion really helps economic growth, that financial inclusion is associated and contributes to the reduction of poverty and inequality, and several aspects, and it has positive effects in several aspects of human development. It helps food security, it improves resilience to external shocks, and improves financial health of the rural families. The problem is that we are not there yet, and we are still far away. This is data coming from the Global Findex data. This is from data of 2021. We are having new data soon, so we will be able to update these figures. But as you can see with these bars, we have for all the regions the levels of financial inclusion in rural and urban settings. And as we are moving forward in financial inclusion, in most of the places, people in rural and urban places is closing the gap in accessing, for example, a savings account or a payment method, but still gaps are there between the urban and rural settings, as Mr. Prasun Kumar was saying. However, when we ask people if they are if they are already using their phones to send or receive money, we see that the gaps widen a little bit more, because in rural settings you have still some issues of connectivity, access to proper mobile devices, and some other restrictions in financial and digital capabilities that are especially relevant in the third world, the global south. So we still need to do something, although everybody has a phone today. And the gap is still there in the usage of digital payment systems, especially in the rural settings. We still have some way to go forward to take really the advantage and to capture the value of these new digital opportunities to help financial inclusion in rural areas. So why helping rural financial inclusion could be relevant for public development banks. Actually, we have the idea that there are three main reasons. First, rural financial inclusion really improves and expands the economic ecosystem and the livelihoods in rural areas. And that is really key for PDBs. When you have a better economic ecosystem to work in, the options to increase the business, to increase the outreach for clients increases, and there are benefits to also improve the economic results of the PDBs. Second, rural financial inclusion really allows clients to perform better. They have better management resources, they have more diverse services to address their challenges, and they become better clients. They reduce default rates, and they provide a lot more information to the financial institutions based on what they could build better and more suitable financial products to attend these clients. And finally, rural financial inclusion, as Mr. Prasun Kumar Das was saying, could help in one of the painful points for PDBs, because it could help to reduce transaction costs, especially when based on digital financial products. And that is key to really increase the outreach and the impact of PDBs, and also could improve the risk management strategies, reducing also the cost of the financial products and services for the final user. However, we still have a long way forward. And despite of all the benefits, there is a gap to be closed between urban and rural financial inclusion, but also there's still some work to go to address full financial inclusion in most of the global south. Why PDBs can do it? Because they have specific characteristics that really make them great and key actors. First, they have financial expertise, a long financial expertise, and they have policy influence. They really have the power to bring other key actors to provide better infrastructure, to build complementary services, to allow clients to improve this their economic situation and their access and usage of financial products, and they are able to mobilize public resources. So that's key. The second thing is that most of the PDBs have a significant presence in infrastructure, real physical infrastructure in rural areas that allow them to be closer and to attend the needs of financial inclusion in those areas. And the other characteristic is that they have long-term investments in the agricultural sector or in the rural settings, and that is something that could complement and enhance the role of other financial institutions, being village-level institutions or microfinancial institutions that are already working there. So well-governed and commercially viable PDBs have a key role to be a leading actor for financial inclusion in rural areas, and they are doing a lot of things. We have dozens of examples, and there are much more around the world. We learn of new examples every single day, and we will listen from two of those good examples in this meeting that are really providing different types of initiatives that are really helping rural financial inclusion, from risk management intervention to promoting and strengthening microfinancial or banking institutions to work in rural areas, or building complementary platforms to really address how to reduce transaction costs to attend the rural populations. There's a myriad of initiatives around the world in which we could take the benefit of these peer learning initiatives to really get more ideas, learn from the others, and move faster and quicker to address financial inclusion. So thank you. Back to you, Alejandro.
Thank you very much, Carolina. As Carolina said, we are pleased to have examples of participation from banks. So now I'm pleased to introduce Mr. Anderson from Belize, which brings over 20 years of senior executive experience across both the private and public sector, with a focus on agribusiness, commerce, logistics, health, and education, and who has served on numerous boards at both national and regional level, representing private enterprises as well as regulatory institutions. So, Mr. Anderson, good morning. We are going to share the screens. Can you see the presentation?
Yes, good morning. Well, it's morning for me. It's, I guess, 1:20 in the morning here. Yes, I'm seeing it. So as Alejandro said, I'm going to share the experience of Belize. Please keep in mind that Belize is a relatively small country, 400,000 people. So I like to say we're a rare species. So when I talk, I'm talking in a very tiny context. Our business model is essentially borrowing from the regional or multilateral development banks and on lending. And that constrains some of the things we want to do because the products we get or the financing we get is what's in vogue with what they're trying to do and sometimes not what we need to do. And I will touch that in the presentation. So let's go. Next slide. So I'll give you a brief history of DFC. I will talk about some of the tools we use. We primarily do lending, but we have things that we do that has worked. I will touch the impact and I will look at two industries here, livestock and bananas. Talk about next practices, things that we're working on, and I'll try to take a few questions. Could you please go ahead? So DFC was established in 1963. This is before Belize even had self-government, right? And it's important because the person who we call the father of the nation, the Right Honorable George Cattle Price, who led Belize to independence, realized that if he wanted to gain independence, he would need to have a national development finance institution. So while there was still a legislative assembly, he started this process, and he had some famous sayings. And there was a thing on the radio from I was a kid that used to say, and it was in his voice, "Wake up and work," right? Wake up and plant. And so the creation of this institution was to provide support to farmers and to create an agrarian reform in Belize. That's what he was trying to do. So the essence of what the DFC is around agriculture. So I just thought that was a cool story to share. So what are some of the things we do to support rural agriculture? And I would like to say that Belize, about 54% of the population live in rural areas. So we're kind of a little bit different there, right? The way we structure the loans, all right, so payments are based on the timing of cash flows. So when the farmers go, let's say, to the commercial banks, you have to pay on a straight line basis. With us, if you're doing sugarcane, it's when you're sending cane to the factory and when you get paid, a first, second, and a third payment. And so we structure based on the timing of the crop. Also, we're flexible with the tenor of the loan. If you're doing citrus, for example, that takes 7 years before it becomes commercially viable, we can give you a moratorium for that long, a principal moratorium, and then we structure. It depends on the farmer, on their needs, but we're able to do that. And we can do things for a longer period of time than you can get in the commercial banks. We provide counter-cyclical financing, all right? When the storm hits and you need to come back, then we come in and we assist. We do grants if we have a grant project. So for example, right now, there's a project that the government of Belize have with the World Bank that is providing climate smart agriculture grants to farmers in small and larger windows. And so we are one of the financial institutions that we're doing blending. We provide our loan financing and we provide the grants, but this comes with a lot of technical support to teach the farmers how to deal with climate change and to make sure that they're building resilience into their investments. From time to time, we're able to offer guarantees. Again, it depends on the project that we're doing. We have had cases where there are investments, financing available to farmers, but they need a guarantee to be able to access the funds And so we perform the guarantee. We also provide technical support. Our relationship officers, we have a few agronomists in each office, and we have offices in each district of the country. So we are able to provide technical support. So a farmer comes in, they have an idea, they know what they want to do. We work with them to put that into the form of a business plan if we need that. And then we provide the technical support and advice and link them with other agencies that can help. We also have flexible collateral requirements. Depending on the nature of the investment and who we're dealing with, then we are able to do things. For example, if I jump down to strategic alliances, in Belize, you have different farmers associations. So if we take the banana industry, for example, there's a banana growers association, and they have a contract with Fifes out of Ireland for many years, from the 80s. But all of their assets are tied to the commercial banks for planes and different things like that. But they came to us because they needed some support to deal with issues with the Sigatoka issue. So we were able to do, based on the contract that they had, essentially a value chain financing of about $5 million to allow them to on-lend to their farmers and to build back and take care of the industry. The impact of that from 2023 to 2024 was a 31% increase in export earnings, right? And this is big farms, small farms, and everything in between. So when you work through the association, you get the entire value chain. It's important for us to do that because everything in Belize is really small compared to the global context. So we have to try to work with creating value chains and value streams, identify entities that are, let's say, the hub, and then we work with the spoke right through. So we also have onboarded an environmental and social management system, and we're teaching farmers how to be more climate smart, how to look at social issues, but also getting them ready for when we have better access to climate finance, that, through their associations, they are ready to accept these funds. We also look at the definition for MSMEs. I mentioned earlier that when we borrow, it's based on what's in vogue. And most of the financing we get are for MSMEs based on the definition of the country. So we had a definition of medium enterprise as 750,000 US. I convinced the government, I said, let's use an international definition. So we adopted the IFC. That's 15 million US. That is how we were able to do business with the banana industry. Otherwise, we wouldn't have been able to. So our impact has been great, and I'll show that quickly. You have to speed up here. Could you go to the next slide? So we have a We Empower loan product, and this is targeted to women of all ages and young men from 18 to 29. Now, this product cuts across all different productive sector areas. The main challenge or constraint for women and young people is access to land collateral. So basically what we did was to remove that. Well, to some extent, and said promissory notes up to $5,000, and that touches a lot of businesses. In terms of this product alone, last year, the uptake was 77% women, right? So it's a powerful thing. We can take salary deductions or guarantors if it's between over 5,000 to 40,000. A lot of times people are working and they're doing something on the side, so we can handle that. Or if it's between 40 to 75,000, 75,000 is the maximum level of this product, we then require collateral. They can use it for capital investment, for working capital, for revolving line of credit, for training, for marketing, even to cover legal fees. So it's a wide range of use. Let's go ahead. We also have our agriculture products, and we finance irrigation, water harvesting, drainage, all of these things that you see. In terms of livestock, we worked with this gentleman that you see here. It took about 20 years for Belize to export cattle to Mexico. And we're doing it. And he's the person who got a contract with Sukarne. So we finance his infrastructure to be able to meet the standards to export, and then working capital, and then he buys from the other farmers, and then we provide financing to the farmers from 10 heads of cattle all the way up to a couple thousand. So we support the full value chain. Year over year, we have seen a 46% increase in cattle exports from Belize. And that's not taking away food for us to eat, because we're pretty much self-sustainable when it comes to food in Belize. So we are selling the excess that we have. Let's go. We also work to push in our EEE at everywhere where it's possible, right? And we have a special financing here at 6%. This comes from the CARICOM Development Fund, and it's part of the CARICOM initiative to drive a just transition. So we have worked to create the system in Belize in terms of the energy service providers, to structure them, to train them up. And we are now rolling out facilities here. We also have what is called a credit risk abatement facility to support this line. So if you don't have collateral, we are able to still provide the loan, and we have an 80% guarantee, if you will, from that facility to protect us if the loan goes bad. Let's go ahead. So this is what it looks like. All of those dots, we have the country divided into 4 areas. So the orange dot in the north, that's where you have livestock and sugarcane. Then the blue dot, that's the central part, that's the western part. That's where you have a lot of the grains and the vegetables and things like that. If you notice the little blue dots, Belize City, that's more services and commercial finance center. There's not much agriculture happening there. And then the purple dot, that's the southern part. And that goes for the 2 districts there. There you have citrus, you have cattle, you have bananas. Bananas is the biggest thing right now, and aquaculture, right? It's spread out through this. So if you look quickly, it's about 22% of our portfolio is in agriculture, if you include renewable energy alone. And we have some breakdowns there in terms of age. But in interest of time, I will draw your attention to the graph at the bottom. We joined the DFC after an election in 2020. In 2021, I was a chairman then, actually. And we started to focus by changing that definition of MSME. We were able to have the kind of impact, and we have had 154% growth in the agriculture portfolio over these years. And everything here is rural, all right? So it has been big. In terms of gender, we're up to about 11.75% female. That's tiny, but we're coming from around 5. So we're making a little progress there, but you're seeing more women coming more in the agribusiness side, where they're making jams and jellies and sauces and things like that. And so we're working with them to do that. Let's go. And so what are some of the next practices? We're working now to use mobile payment systems. We're not creating them. Belize has decent, or I think above average internet availability across the country, even in some of the rural areas like in the south. If they're not getting internet from Belize, they're getting it from Guatemala. And so it still works. And so the telephone company has DigiWallet, one of the commercial banks have eCash. So we are now providing that facility for clients to pay. We're upgrading our whole core management system. We're using a platform called Croatia, which is no code. That's very powerful because it allows us to map our workflows, and we don't need any consultant to come to code for us. It's no code. You don't need to code. And every piece of data you have in there, you have the ability to use it to create reports. So the report you saw there, we just pull that data and everything we capture. So we are now in the final phases of testing. On June 1st, we expect to go live. And that brings with it omnichannels where farmers can, and people in rural areas can actually, will be able to do business with us via online. Now, you may say that some people are not ready for that, but what we see in Belize, the kids know how to use it, and they work with the parents, and so the ability is there. Simple things like signing documents, you will not need to come to the DFC for that. Everything can be done online, and that saves money. Climate finance, we need to access this more. We're in the final phases of GCF accreditation. We expect to go to the June board, and we have started the process to the adaptation fund as the national financial institution for Belize. We're working there, and it's not only for lending, but lending, blending, guarantees, equity. So we're doing all the financial institutions to be able to have structure. Insurance, this is something we have been trying to work on. I spent many years in the agribusiness sector, and we are always told that we're too small and the risk is too high. So this is not something we have right now, but we're working. Measuring impact is important. So we have developed a monitoring, evaluation, and accountability learning strategy, and we're automating that in Croatia, which means that we will near real time be able to measure outcomes. And over time, when we collect the impact data, measure impact. We believe that's a powerful thing. Again, AI, machine learning in there. So it will allow us to understand the needs of the farmers better, design better projects, and also evaluate as you go in an agile way. We are not into evaluating after 5 years for the next project. We have to improve as we go because we're dealing with people. That's it. So any questions? Thank you.
Thank you, Mr. Anderson. Thank you very much for your intervention. I will now give the floor to Panha. I am pleased to introduce him. He's the Director of Business Strategy Development at ARDB in Cambodia. And he brings the solid experience in development finance, leading ARDB's transformation into a sustainable and digitalized institution aligned with the national policy. And he also serves as a team leader with at FIAP and holds advanced experience in economic development and sustainable finance. Mr. Kui, can you see the slides now?
Yeah, thank you, Alejandro. I already see my slide. Thank you. Okay, first of all, thanks, Dr. Kumar, Dr. Prasun, very precise your opening remark, and also thanks to Carolina and also Henry for your insightful idea in terms of the rural financial inclusion for today's topics. So today, I'm very honored to have the opportunity to share with our Agri-PDB platforms about the Cambodia, especially about the Agricultural and Rural Development Bank initiative, contributing to rural financial inclusion. Okay. So for my intervention here, I would say there will be three main categories. The first category, I would bring you all to the Cambodia rural economic context a little bit. And then I would bring you all to the ARDB initiative, that what we have done so far, seeing we have established already 26 years up to now. And lastly, there will be some of the concepts to be considered for the contributing to rural financial inclusion for sustainable growth. Okay. So could I have the next slide, please? Yeah, if you look at to the Cambodia rural economy, I would categorize it by these key characteristics. Currently, there's around 75% of Cambodia population still reside in the rural area. And most of them still depend on the agriculture sectors, especially the crop plantations, poultry, and also aquaculture. So the majorities of our rural economy is based on the agricultural sectors, that is, we can say. And even though we are trying to move from the developing country to developed country, as our government would like to see in the future, there's still the high poverty levels that we can observe currently. And mostly it is in the rural areas that is still high, meaning to say there are still people living under the poverty line below $2. On the other characteristic, we might also observe the highest vulnerable to the extreme weather events. I would say in Cambodia, we also impact a lot in terms of the climate change recently. I've seen last 2 years, the heat very high, and most of the vulnerable is the people who are living in the rural areas, since they cannot access to all the public services that are offered. And another characteristic that we might also observe in Cambodia, there's still the disparity between the role of men and women in Cambodia, because this one is already the traditional concept, but still is influenced in the society. That's why the economic participation and the opportunity for men and women, there's still disparity, they are not equally yet. And the last characteristic of Cambodia economy, we may look at to the financial literacy. I would say financial literacy in Cambodia is still limited, and there's still some more effort needs to be taken in order to boost the financial literacy in Cambodia. So in overall, that is the Cambodia rural economy that you can observe. There's still some room for the rural financial inclusion effort needs to be taken. Next slide, please. And in Cambodia also, there's two main sources of finance. We can observe this. People can access to finance through formal sources and also informal sources. And at the moment, at the end of 2024, there's 62 banks in Cambodia. These include commercial bank and also a specialized bank. And we have 89 microfinance institutions. And also we have 13 financial leasing institutions. So these three formal sources are the player in terms of providing finance to the people. You will see next about the challenges that we are having in terms of providing the formal sources to the people. On the other hand side, you can see there's also still informal sources that people, especially the rural people, they still access to the informal source. They can access to their relative, friends, neighbor, and money lenders. These are still popular in particular area in Cambodia. That's why informal sources is still the things that we might need to look at. Okay. Can I have the next slide, please? Yeah. Yes, this is very interesting data that I would like to share with our friends from APRACA. If you look at the barrier to rural financial inclusion in Cambodia, I would categorize it into three categories. The first one is limited financial infrastructures. The second one, a financial literacy constraint. And lastly, there's still fragmented lending in Cambodia. So if you look at the financial infrastructure in Cambodia, I would say there's not diversified financial products. There's not yet enough for the rural areas because there's some part they still can access to finance, but some part cannot access to finance because of they have different characteristics and there's not enough product for them to be accessible. And the second thing about the financial infrastructure, we can look at to the collateral based. In Cambodia, I don't know whether the other country have the same barrier, but here most of the financial institutions, they use the collateral as the major criteria to be accessible to the finance. So that's why it's still limited. But I will bring you some initiative after this barrier. And you look at the financial literacy constraint, it is surprising also that only 80% of Cambodia are considered financial literate. So there's a very small amount of numbers of people who are living in rural areas that understand about the financial knowledge, financial education. And if you look at the ALA Standard Poor Global Financial Literacy Survey, that is also surprising that we are at the rate of the 135 out of 144 in terms of financial literacy. So I think it's also quite challenging for us here. And lastly, it's about the barrier to the rural financial inclusion is the fragmented lending. Like I discussed with you earlier, we have the financial institutions, but mostly they use the collateral as the, for example, like the real estate, something like that, in order to access to finance. But if you look at the other sides, there's also not that, how can I say, coordination, the coordination between the other stakeholders like insurance, like guarantee schemes, they join together in order to make it not fragmented. So this is also very sensitive or critical point that we need to consider. Can I have next slide, please? Realizing those challenges, ARDB trying to work very hard, I can say by this way, because we established already 26 years up to now, and then we have worked a long way. And then our main aim is to improve or strengthen the socioeconomic development in Cambodia. So in order to tackle the three challenges, three barriers, we have introduced three major initiatives in Cambodia here. The first one, we are trying to enhance integrated accessibility initiative. That is our task that we have done so far, meaning to say we have tailored several financial products to fit all the stakeholders in the agricultural value chains. From farmers, from downstream to upstreams. We have graded to smallholder farmers, we have graded to agricultural cooperative, and also we have the graded to MSME. So this criteria in order to access to abilities to access the credit, we have different criteria. So this is our effort in order to design the product to fit with them. And the second initiative that we have done so far also, that is promoting financial literacy initiative. How can we do that? We have to make a mechanism in order to promote financial literacy. The first one we promote through broadcasting, and the second one we promote through digital platforms. Broadcasting, we need to say we have our broadcast channel that is called ARDB TV, and our objective is mainly to disseminate the information that the people cannot access to it, especially people who are living in the rural area. And those aims are like, we have the not only about the financial literacy, but also sometimes we include the technical support in order to make them aware and make them know how to do their business plan, something like that, okay? And lastly, we also do the digitalization transformation initiative. I think we implemented this in 2014, up to now almost 10 years, because we have our 10-year roadmap already designed, and also there's 2 phases already for our 20-year roadmap. The first one, we developed it since we established, and now we amended it already. There's another 10-year roadmap, and our aim for this is to make our bank to be digitalized. And in short, I would say by this way, at the moment, the customer, not only the company, but also the people who are living in the rural area, they can apply the loans through the digital platforms. Meaning to say, they just apply the loan, and then our staff just at the field, they just fill in the form, and then they transfer digitally, and then we can approve the loan digitally also. So this our initiative to make them easily access to the finance. Next slide, please. Yes, and that is, I would say, this is our impact that we have done so far, and that is our loan portfolio. You can see this. We have all the loan portfolio across all the provinces in Cambodia. So we have 25 provinces, and then all the loan have been dispersed to all the provinces around Cambodia. You might consider why there is some province have high level of the loan portfolio and why small, because we have the strategically support in some particular area that is already designed. And the people who benefit from this, they're also male and females. We have meaning to say we are trying to encourage the females entrepreneurs also to join the access to finance. And we also have been providing a disbursement fund to SME in agriculture and also agricultural cooperatives. So at the moment, we have around 500 million USD already, and it's covered all across the provinces in Cambodia. Okay. And lastly, next slide, please. And lastly, I think there's still, can I have next slide? Yeah, lastly here we still have the needs to have the key partnership, and I mean to say that all key stakeholders needs to be partnered together in order to leverage our collective impact. So I would say we have government, private sector, and development agencies. So these are the 3 key players in order to contribute to the rural financial inclusion. I would say we also have working with the IFAD and also some of the development agency like ARDB and also World Bank. And mostly we target the financial inclusion. We would like to develop the ability to access to finance. And we also have received some of the technical assistance from IFAD and also World Bank and ARDB in order to make this happen. So lastly, collaboration is still critical to enhance the collective significant impact for rural communities. And thank you so much.
Thank you very much, Mr. Kui. Now we are going to go to a Q&A session. So I will give the floor to Mohamed Ali.
Alejandro,
Yes, we can hear you.
Okay, great. So thank you very much, Dr. Prasun, Mr. Henry, Carolina for staying awake until 3 a.m., until midnight, and Mr. Kai for the great presentation. I would like you to open the Q&A session, and I do have a couple of questions for Mr. Henry from Belize. The first one, how effective has the We Empower loan product been in improving access to finance for women and young men, particularly in rural area?
So I was putting an answer in the chat. So we have seen over 2023 and 2024 a doubling of the portfolio for MSMEs. Last year it's about 77% women, and I would guesstimate about 40% of those women are in rural areas. We're seeing a lot of women in rural areas having micro and small businesses. I think you need to appreciate, I didn't speak of education, that's something we do. And we're seeing a growing number of women from rural areas also accessing tertiary level education. In Belize, about 3 women to 1 male are in the university, and that's both urban and rural. So we're seeing a transition happening there. That's how that's playing out. In terms of the other question that was there, the mobile banking access has been taking off in Belize over the last 5 years, and we're seeing this moving and moving. Based on stakeholder engagements, we have adopted, as I mentioned earlier, using the one from the national telephone company, DigiWallet, and one from one of the commercial banks called eCash. And as we're building API connections to the other bank, that will come on stream. So we're going to use all of them to give clients the ability to use whichever they feel more comfortable with. But we are seeing a lot of companies doing payments through these wallets, and clients in rural or persons in rural areas are using it to transact. And when you speak with them, they're telling you that because they don't have cash in their hands, then the men don't go and drink, you know, as much as they would have if they had cash. They are more responsible with the financing. So those are some of the things we're seeing. In terms of the collateral registry, that just came on stream. It was launched in December of last year. So we are now using that, and it works because between the financial sector, we're able to register our assets and we know who has what. And so it's clearing up. So that's a work in progress, but it has made things quicker in terms of, you know, the turnaround to grant the loan, because it's easier to manage the collateral and to find out. In the past, that would have, you've had to go to the lands registry of all places, because that was where you would register these things, the bill of sales. Now it's electronic, so that's a seamless process that takes minutes from what used to take days, and it costs us less. So.
Thank you very much, Mr. Henry. We do have other 2 questions from Dr. Prasun and Madame Bianca. I will start with Mr. Prasun, then I will move to Madame Bianca. Over to you, Prasun.
Yeah. No, thank you. Actually, I have a question to Carolina. When I was going to this, the report of the ARDB platform, I think the report has, it's a really comprehensive report. One area I thought maybe we could have added in this report is about the importance of the affordability of the rural finance. So one, in Asia, in most of the countries, we are recently working in 5 countries on a project where we find that rural finance, the inclusion, financial inclusion, everybody knows about it. They are financially literate, but the rate of interest in case of credit and the rate of interest in the savings, there's a huge difference. So the average difference is around 8 to 9%, which is very high. And how our member institutions can reduce this, apart from the digital services, because digital services initial investment is also high. So whether we could put some support from the PDBs or maybe subsidized the rural finance to make it more affordable. What do you think, Carolina?
Yeah, thank you, Prasun, for the question. This is a huge topic, and I think we could devote a whole session just to talk about affordability of these financial services and the spread, and how we could reduce the spread between savings, interest rates, and credit. But I would say that today we have a great opportunity, especially from PDBs, to address this challenge by using a lot of new technologies, using the new technologies to manage and better use information. So instead of charging just the average interest rate, we could be a lot more efficient in defining exactly a differentiated interest rate if we have enough information from our clients, and that will improve the targeting. So we will be charging exactly the rate of the interest rate that each client should receive, and not just a general average standard, and that will improve precision. But that will not mean that this will become a reduction of interest rate for everybody. So that's a big challenge also. But the other thing is that a big component of the cost of providing credit to rural areas is around transaction costs, and digital is helping us with that. But the other big portion comes from risk. And in very complex times in which we face weather shocks and climate events that are coming more frequently and with more impact in rural areas, that is a big challenge. So we need to begin improving the way in which PDBs are using risk management tools, not only savings and warranty funds, but a lot more other things. And we should begin really considering how to enhance all the work that PDBs are doing in developing new risk management tools in a way in which we could take out the risk of these rural transactions and put it in the global markets, in the risk market, so we could avoid charging the risk premium that is pretty high, especially for small loans in remote areas and highly weather affected areas. So I think those two ways could be ways forward to improve the way in which we define the cost of especially credit.
Thank you very much, Carolina. We really appreciate your effort to stay awake. Okay, maybe for Madame Getzel. Go ahead.
Hi, Mohammed. Thank you. I'm not sure how I can turn on my video, so unfortunately you can't see me. But I'm Bianca Getzel, and I lead on the public sector efforts of the Currency Exchange Fund, TCX. And Carolina, I couldn't have asked you to set up a better transition for the question I'm about to ask, which is specifically on the market risks that public development banks are exposed to. Several of colleagues who spoke, and I'd be interested in the inputs, especially of Cambodia and Belize on this, mentioned that they are receiving financing from multilateral development banks or development agencies, all of which is usually denominated in hard currency, dollar or euro. And obviously, public development banks extend loans, especially when it's not export-oriented sectors of the agri-value chain, to final borrowers who are highly exposed to currency risk. So it would be great to hear from the participants mentioned as to how, if any, mitigants that they have in place to deal with currency risk on their balance sheet, if the specific PDBs that spoke today are actually receiving loans from multilaterals in hard currency, and whether they see this as a problem, or if currency risk appears on their portfolio in other avenues aside from the more obvious one that I just mentioned. And obviously, I'd be very happy to engage in the discussion further on how TCX has solutions for this space.
Thank you, Bianca. Who can take this one?
Okay. Well, in Belize, Bianca, we have a fixed exchange rate. So we're tied 2 to 1 to the US dollar. So that kinds of assist. The biggest risk we have faced over the last couple of years, borrowing from multilaterals, let's say IDB, it's we borrow at SOFR, secured overnight financial rate, plus a markup. So when the Federal Reserve in the US is trying to rein in inflation and they increase interest rates, then the SOFR goes up. So we had a loan that was priced at 1.2%, and about first quarter last year, that made its way up to 6.7% to us. Essentially what we have done, I joined DFC in 2021, and it was losing money for the last 3 years. It has been profitable, although that's not our major goal, right? But we have to be. We basically looked at the operating ratio, and we took it down from 88% to like 54%. So we're improving our return on time invested and being more nimble in what we do. If I could just say something about the interest rates, we were charging interest rates around 12 to 16% to farmers. And when we got involved, when we started to look at it, a lot of it was perceived risk. If you know the farmer, you understand their markets, where they're selling to, you look at the contracts they have, because some do have. We have been able to reduce our average lending rate to about 8.5%. All right. And what that has done, that has put pressure on the commercial banks. Now, we don't have the insurance tools, and we're living in terms of the climate, if the hurricanes come through. But we're working with farmers like in cattle to adopt a silvopastoral method, in sugarcane to move to drought-resistant types of sugarcane, better drainage, better land preparation. And those are simple things, but they work. Right. Now, when a category 5 comes in, that's a whole different discussion. But in between those things, that's what we're doing. So to answer you quickly, we don't have much translation or transaction risk because of foreign exchange, because we have a fixed currency.
Thank you.
I don't know if he also had inputs, if he's still online with us.
Maybe you could rephrase your question. I think
I was just wondering if Panha also wanted to come in on the question, if he's still online on the currency risk they're facing. And just quickly on your point, Henry, yeah, there's obviously solutions in the market to also deal with the floating versus fixed risk that you face, i.e. interest rate risk. So yeah, but I don't know, Kui, if you wanted to take the floor.
Okay, yeah, thank you, Gatan. I think in terms of this perspective, of course, as we are bank, we exposed to the exchange rate risk. But what we have done so far, we are trying to design our product into two currency, meaning to say the rural area, if they're willing to take the Khmer reals, they also be available for them. Even though we are taking some of the fund from developing partner in the currency or in the euro, but we are trying to make it viable for our customer, because our proportion to fund from the development agency is quite small, but we still have the government fund which injected to us in the Khmer real currency. So what we are doing at the moment, we are trying to tailor our product into both currency, either USD or H or real. So these are our strategy to minimize our risk in terms of the exchange rate risk. That's what we are doing right now. Yep.
Mr. Kui, and thank you very much for your question as well. So now I will give the floor to James Marc de Sousa, who will just give some closing remarks. James is a specialist in rural inclusion, in rural finance in IFAD. James, please, the floor is yours.
Thanks, Alejandro, and thanks to the presenters for sharing their diverse and rich experience and activities in inclusive rural finance through public development banks. As Carolyn set out that at the top, the objective really should be to make sure that all rural citizens and their enterprises, the enterprises that they depend on, have access to sustainable financial services. This is fundamentally important, as she pointed out, for rural economic dynamicism, food security, equality, and increasingly, as we've been talking about, particularly towards the end, risk management, both at the institutional level, but at the farm level, at the household level. Things are not getting easier with climate, with weather events, with changing economic times. The trade patterns are changing massively and quickly. And we're seeing all sorts of different kinds of macroeconomic shocks. So building in resilience through public development banks is fundamentally important. And that brings us to the question, well, what can public development banks do differently than commercial banks, for example? And why PDBs? I think Caro asked that question as well. And I would say, well, a well-managed, and a well-governed and a forward-thinking public development bank has a lot to offer in terms of the public goods that it can provide and the leadership that it can offer to the financial sector, particularly if they take this public good mission seriously and are well managed and governed. What are some of the things that got mentioned? Well, mobilizing public money, including blended finance, and then being able to integrate risk mechanisms for accepting foreign denominated currencies through hedging mechanisms, potentially. They have great rural footprints. So cash is still pretty important in most rural areas, despite the advance of digital and innovative platforms. But having a agency service throughout rural areas, and Mr. Panha, your map of where you serve in Cambodia is impressive, of course, as well as in Belize. So this is very important. Specialized services, we heard a number of them focusing not just on the household or the farm level, the enterprise level, but the value chain level in bananas, sugarcane, in Belize, very important. And then also being able to price properly, looking at risk differently because you have the kind of experience in these markets that maybe commercial financial institutions don't have. And leadership, I should mention, in climate and trade, but also in the enabling environment, in policy leadership, particularly in financial literacy, as we saw in both cases, Cambodia and Belize, but policy and enabling environment more generally. You can take a leadership position there. And I think one of the keys that came out for me as well is the importance of partnerships. And that was set out right at the top by Prasun, but it was also emphasized in Belize and Cambodia, working with civil society, working with cooperatives, working with farmer organizations, working with other financial institutions like MFIs or community-based financial institutions, which is a comparative advantage for IFAD, for as many of us know. So these are very important, and they don't just work at the business level, but they work at the policy level as getting the right kind of information into the policymakers that serve the underserved or the unserved in rural areas. And I would just say by closing that all of this work that the public development banks are doing is really important to supporting the type of work that IFAD does. And I know that we work with public development banks across our portfolio. We currently have about $1.4 billion of inclusive rural finance activity ongoing, and we've had about almost $3 billion since inception. So we're a big player. Actually, some posit we might be one of the largest local currency lenders or facilitators of that kind of lending in the world in rural areas. So it's pretty nice. But we do it through our sovereign operations. We do it through our non-sovereign operations. And in fact, we have some operations in Uzbekistan at Amcor Bank, Bolivia, Crescer, and another one coming up in Botswana. And we target those for being, well, catalytic investments so that they're going to lead the way to get other investors into those financial institutions, but also just to expand and develop the rural inclusive finance market. And that's a key principle of our inclusive rural finance policy. Another one is being people-centric, which definitely the public development banks are, and being demand-driven, which increasingly they are, and then finally supporting the enabling environment. So those three principles of our inclusive rural finance policy were well demonstrated with the presentations today. And I just want to end by saying this is an important way forward for financial inclusion. Given the changing context, we're going to need more and more public development banks pursuing the public good and ensuring that people don't get left behind and they are actually brought forward. So thank you for the opportunity to close the event. Over.
Thank you, Marc. Well, we want to thank you all for your active participation and from your interest in this joint effort. And we trust that today's discussion will serve as a foundation for concrete actions in the future strategic partnerships. We will be sharing information soon about the second session of the working group, and where we will present practical tools for the banks. Thank you very much all, and we wish you all an excellent rest of the day.
Thank you. Thank you
Thank
very
you.
much.
Take care.
Bye.
Thank you, everybody.
Bye.
Thank you.
Bye.
Thank you.